Most traders think the market is their enemy. The charts, the indicators, the news, the whales. But the truth is, the real enemy in trading is not the market. It's your own mind. Two people can take the exact same trade with the same strategy, the same entry, the same stop loss, and one will make money while the other blows the account. The difference is not knowledge. The difference is psychology. Trading is not a game of prediction. It's a game of emotional control. And if you cannot control your emotions, the market will control your money. In the beginning, almost every trader believes that success comes from finding the perfect strategy. They jump from one indicator to another, one YouTube video to another, one holy grail system to another. But after some time, they realize something painful. Even with a good strategy, they still lose. Not because the strategy is bad, but because they don't follow it properly. They enter trades too early because of excitement. They exit too late because of greed. They skip stop losses because of hope. And they overtrade because of boredom. These are not technical problems. These are psychological problems. The market is designed to attack human emotions. When price goes up fast, it creates FOMO, fear of missing out, and you feel an urge to jump in without a plan. When price goes against you, it creates fear, and you want to close the trade even if your setup is still valid. When you are in profit, it creates greed, and you start imagining big money, so you remove your target. When you are in loss, it creates hope, and you start praying instead of thinking. The market constantly pulls your emotional strings, and most traders dance exactly the way the market wants them to. This is why most traders lose, not because they are stupid, but because they are human. The human brain is not built for trading. It is built for survival. In real life, fear saves your life. In trading, fear destroys your account. In real life, greed helps you work harder. In trading, greed makes you over-leverage. In real life, hope keeps you going. In trading, hope keeps you in bad trades. The same emotions that help you survive in the world are the same emotions that kill you in the market. Professional traders understand one brutal truth. You cannot remove emotions, but you can train yourself to not act on them. The goal is not to feel nothing. The goal is to feel everything. Fear, greed, excitement, frustration, and still follow your plan like a robot. The moment you click the buy or sell button, your job is already done. From that point, your only responsibility is execution, not emotion. If your stop loss gets hit, it's not a failure. It's just business. If your target gets hit, it's not genius. It's just probability. Trading psychology is about shifting your identity. You stop thinking like a gambler who wants to win today. You start thinking like a casino owner who wants to survive for years. A casino doesn't care about one player winning or losing. It only cares about playing the edge again and again. In the same way, a trader must stop focusing on individual trades and start focusing on series of trades. One trade means nothing. 10 trades mean something. 100 trades define you. Until you master your emotions, no strategy will save you. You can copy the best trader in the world, use the best indicators, join the best paid group, and still fail, because the problem is not outside. The problem is inside. The market doesn't need to beat you. You beat yourself. And the first step to becoming profitable is not learning more indicators. It's learning yourself. Every trader, no matter how experienced, goes through the same emotional cycle. It starts with hope. You see a setup, you imagine profit, you visualize a perfect trade. Then comes excitement when the trade starts moving in your favor. Your heart beats faster, you keep refreshing the chart, you start calculating how much money you will make. At this stage, you feel smart, confident, and in control. But this is the most dangerous phase, because excitement slowly turns into greed. Greed makes you break rules silently. You don't even realize it. You move your take profit higher because it can go more. You increase your lot size because this setup looks strong. You open another trade because the trend is clear. Greed makes you believe this time is different. You start thinking in money instead of thinking in probabilities. And the moment you start thinking in money, you stop thinking rationally. Then the market does what it always does. It pulls back. Suddenly, your profit starts reducing. Excitement turns into anxiety. Anxiety turns into fear. Now you are watching every single candle like your life depends on it. You want to close the trade, but you also don't want to miss more profit, so you stay. The pullback becomes deeper. Now you are no longer thinking about profit, you are thinking about not losing. This is where emotional damage begins. If the trade goes into loss, fear turns into hope. You start telling yourself stories. It will reverse. The market is just trapping traders. My analysis was right. The timing was wrong. Hope makes you hold losing trades longer than you should. You remove your stop loss. You widen it. You start praying instead of planning. At this point, the trade is no longer a trade. It becomes an emotional attachment. And when the loss finally hits, the strongest emotion appears: regret. You replay the trade in your mind again and again. You blame yourself. You blame the market. You blame the strategy. You feel angry, frustrated, and disappointed. This emotional pain creates one of the most dangerous behaviors in trading: revenge trading. You want to make your money back quickly. You open random trades. You increase risk. You stop following rules completely. And this is how one small loss turns into a blown account. This entire cycle, hope, excitement, greed, fear again, regret, revenge, repeats itself for most traders for years, not because they don't learn, but because they never break the emotional loop. They keep trying to fix the outside, new indicators, new mentors, new systems, but the real problem is inside. Their emotional reactions never change, so their results never change. The key to controlling fear and greed is awareness. You must learn to observe your emotions like an outsider. The moment you feel excited, you should become cautious. The moment you feel scared, you should check your rules. Your emotions are signals, not commands. They tell you what is happening inside your mind, not what you should do in the market. A disciplined trader does not ask, how much can I make on this trade? A disciplined trader asks, is this trade according to my plan? This single shift changes everything, because plans are logical, emotions are not. When you trade based on a plan, losses don't hurt as much. Wins don't make you arrogant. You become emotionally neutral, and emotional neutrality is real power in trading. Until you learn to sit calmly in both profit and loss, you will always be a slave to the market. The market rewards patience, discipline, and emotional control, not intelligence, not prediction, not luck, just control. Most traders think discipline means being strict with themselves, but real discipline is not about force, it's about structure. If you rely on willpower to control emotions, you will fail, because willpower is limited. Some days you feel strong, some days you feel weak. The market doesn't care about your mood. That's why professional traders don't depend on feelings, they depend on systems. A trading system is not just entries and exits, it is a complete set of rules for behavior. When to trade, when not to trade, how much to risk, when to stop for the day, how many trades per session. These rules exist for one reason: to protect you from yourself. Every rule you write is a wall between your emotions and your money. Without rules, every decision becomes emotional. With rules, decisions become automatic. One of the most powerful psychological habits a trader can build is pre-commitment. This means you decide everything before the trade, not during the trade. Before you enter, you already know your entry, your stop loss, your target, your risk, and your maximum loss for the day. Once the trade is live, you are not allowed to think. You only execute what you already decided. This removes 80% of emotional mistakes instantly. Another key principle is risk control. Most emotional problems in trading come from risking too much. When you risk big, every candle feels personal. Your heart rate increases. Your mind becomes noisy. You start staring at the screen. You can't sleep. You can't think clearly. But when you risk small, emotions become quiet. You don't care as much. You can follow your plan easily. This is why professionals risk 1% or less per trade. Not because they're scared, but because they want mental stability. Journaling is also a psychological weapon. After every trading day, you write what you did, what you felt, and what you learned. Over time, patterns appear. You see that you always overtrade after a win. You see that you revenge trade after a loss. You see that you break rules at certain times of the day. This awareness slowly kills bad habits. You stop being unconscious. You become self-aware. And self-awareness is the foundation of self-control. Emotionally strong traders don't try to avoid losses. They expect them. They understand that losses are part of the business, like expenses in in a company. A shop owner doesn't cry when he pays rent. A trader shouldn't cry when he hits stop loss. It's the cost of staying in the game. The moment you accept losses emotionally, they stop controlling you. The final level of trading psychology is detachment. You stop caring about being right. You stop caring about proving something. You stop caring about one trade. You only care about following your process. Win or lose, you feel the same. Calm, neutral, focused. This is what it means to be emotionally unbreakable. At this level, trading becomes boring, and that's a good thing, because excitement is for gamblers. Boredom is for professionals. When trading becomes boring, it means you are no longer controlled by emotions. You are controlled by rules. And when rules control your actions, consistency becomes inevitable. Now that you understand the emotional traps, it's time to take concrete steps to master your psychology. Awareness alone is not enough. Knowledge without action is wasted. The first step is routine. Professional traders follow strict daily routines. They check the market only at pre-decided times. They avoid random scrolling of charts or news. This reduces impulsive decisions. Your brain starts to expect structure, and structure calms emotions. Next is meditation in mental conditioning. Even 10 to 15 minutes a day of quiet focus changes how you respond to stress. Traders who meditate are less reactive to sudden price swings. They don't panic when stops are hit, and they don't get euphoric when trades go their way. Meditation trains the mind to watch emotions without acting on them, exactly what trading requires. Another key principle is pre-session planning. Before the market opens, you write down everything: setups you will watch, acceptable risk per trade, total daily risk, and maximum number of trades. When you commit to a plan beforehand, your decisions during the session become mechanical, not emotional. Mechanical execution kills impulsiveness and protects your account. Use checklists. Before entering a trade, you must check: does this meet my setup? Is my stop loss correct? Is the risk acceptable? Am I emotionally calm enough to execute this trade? If the answer is no, at any point, you skip the trade. This simple habit filters out trades made from fear, hope, or greed. Set strict stop loss and target rules. Never, ever move your stop loss because the market is trending in your favor. Never increase position size mid-trade to chase profit. Every deviation from your plan is emotional behavior disguised as intelligence. Markets punish that. By treating stop loss and target as inviolable rules, you remove emotion from execution. Finally, focus on long-term consistency over short-term success. Profitable trading is not about making money today. It's about surviving tomorrow, next week, next year. One trade does not define you. One day does not define you. 1 month does not define you. Your career in trading is measured over hundreds or thousands of trades. The calmer and more disciplined you are over time, the more consistent your profits will be. The final secret to controlling emotions in trading is mindset. Professional traders don't chase money. They chase process. They don't aim to be right all the time. They aim to follow their plan all the time. Their focus is on doing the right thing, not on feeling good or proving themselves. This mindset separates winners from amateurs. A professional trader sees the market as a probability machine. Every trade is just a roll of the dice, and over hundreds or thousands of trades, the edge of their system plays out. They don't get attached to individual outcomes. A loss doesn't make them upset. A win doesn't make them arrogant. Emotions exist, but they don't interfere with decision-making. They understand that luck is temporary, but discipline compounds over time. Another key aspect is patience. Patience is not just waiting for setups. It's waiting without fear or anxiety. It's staying out of the market when there's no opportunity. Many traders fail because they feel compelled to trade constantly. Professionals wait. They watch. They act only when the probabilities are in their favor. Waiting is not passive. It's an active exercise in emotional control. Self-confidence in trading comes from preparation, not ego. Professionals don't doubt themselves because they have systems that work, rules they follow, and habits that protect them. Confidence is rooted in competence, and competence comes from disciplined practice and honest self-review. They don't blame the market. They don't blame other traders. They take full responsibility for every decision, and that ownership frees them from fear. Finally, professional traders embrace losses as lessons. Losses are not failures. They are feedback. They highlight mistakes, emotional weaknesses, or flaws in execution. When a professional loses, they analyze with without judgment, adjust the process, and move forward. They never try to win back a loss emotionally. This detachment is the ultimate power in trading. In the end, trading is not about strategy, charts, or indicators. It's about mastering yourself. The market is a mirror that reflects your strengths and weaknesses back at you. The trader who can sit calmly amidst chaos, follow rules without hesitation, detach from outcomes, and maintain long-term focus will always succeed. Emotions will still come, but they will no longer control your account. And that, ultimately, is the difference between an amateur who struggles and a professional who thrives. Trading is a lifelong journey of self-mastery. If you commit to understanding your mind, respecting your rules, and staying disciplined, profits are not just possible, they become inevitable.